If you're getting into investing, then this video is just for you. And in this video, I'll be talking about mistakes that you should avoid when investing in the stock market this year. Now, most of this information is free. You don't necessarily have to buy some expensive course for $1,000 to learn about investing and to make money in the stock market. And simply put, to make money in the stock market, you have to do two things. You have to, one, purchase stocks at a low price. And then the second thing that you need to do is to sell the stocks at a higher price than what you paid for them. So that's really it. You buy low and then you sell high, and the difference is your profits. However, the problem comes in when, for example, a stock keeps going up and it keeps going up and people keep purchasing the stock and they purchase into that stock at the very top. So they purchase at a very high price and then the stock has a correction or it comes crashing down, and then when they sell, they lost their money or most of their money. So this can be avoided, and that's what I'll be talking about in this video and some other things as well. So stick around to the very end of this video so you can hear about a couple things that you should avoid when you're investing in the stock market. Now, a very quick reminder here, welcome back to the channel if you're already a subscriber, and if you're new here, my name is Ian, and on this channel I talk about ways to make money, ways to save money, investing, banking apps, credit cards, and everything that has to do with personal finance. So if you like these videos and you like these topics, be sure to give this video a thumbs up. I'll really appreciate it. It's 100% free to give this video a thumbs up. And also consider subscribing to the channel and turning on all notifications. And that way you'll never miss the updates when I post new videos, and I post new videos on this channel every single day. Now, the stock market isn't all gambling. Some people think it's gambling and you just have to guess what stock is going to go up and which stock is going to go down. And while it's risky, to protect yourself, you have to understand the value or what a company stock is worth before you actually purchase it. So a quick example, you could purchase Google stock for $2,000, but Google stock at the time of you purchasing it was worth, let's say, $2,500, and the stock was actually just undervalued by $500. At that point in time, you bought it at $2,000 and you'd be in, or at least $500 in profit per share when you consider the valuation of that stock when the price is adjusted to be where it needs to be. Now, the same applies to stocks that are overvalued. Maybe you bought Google stock for $3,000 when in fact the stock or the company stock wasn't worth that much. Maybe it was only worth $2,000, and so you paid $3,000 for a stock, and then when the price is or was adjusted or corrected to reflect the actual value or real value, you lost $1,000 on your investment. Now, if you're wondering, how do I know what the value of a stock for any particular company is worth? That's a great question, and to find this out, you'd have to evaluate the company's financials, which is available to you if you are an investor. However, if you're like me, you either, one, have no interest in going through this for several stocks, or two, you don't know how to do it, or three, maybe you don't know how to do it and then you don't want to learn how to do it because it's going to take you a lot of time, and that's okay. That's completely fine. So if this is you, I would recommend that you read one of two books, or actually read these two books, right? The first one is A Beginner's Guide to the Stock Market, and you can get this book for less than $10 right now. So it's worth the investment if you're planning on investing a lot in the stock market. And then the second book that you can read that can really help you out is a book called The Intelligent Investor, and that book is for less than $20. So I would recommend that you read these two books before you actually start dumping money or investing money a lot in the stock market. So there are a few things that you need to know or that you need to learn, and you can get a lot of information from these two books. So the first mistake I don't want you guys to make is to just start grabbing your money and investing without learning anything about the stock market. And yes, while you're watching this video and probably several other videos on YouTube which are free, and I'm telling you about the stock market mistakes to avoid, the first stock market mistake to avoid is to just listen to anyone online and to just take their advice, and this includes me. Be sure to read and do your own research before you actually start investing in any stock, any ETF or fund, and you should always do that. Now, the second stock market mistake that I want you guys to avoid is using leverage. Very good leverage can actually help you to make a lot more money in the stock market. And for example, on the M1 Finance platform, if you have over $10,000 invested, you can borrow up to 25% of the value of your investments as a leverage to invest. So you can take a loan of 25% of whatever your investment is valued at, and then you can use that to invest in other stocks or ETFs or something that can make you more money. And this is actually very good. In this case, the leverage isn't so bad because if you have $10,000 invested and you take $2,500 because you realize that there's a stock that's undervalued and the price is way down and you expect it to go up, then you could take that $2,500 and invest it into that stock. And when the price goes up, you made some money and you can pay that off. However, leverage is a really bad idea if you're going to liquidate any of your assets to invest. So for example, if the stock market goes down and everybody says that the stock market is going to bounce back and you believe it, you could sell your car or you could sell your furniture and then you can use that cash to invest and go all in. But that's not necessarily a great idea because while you could make money, this is a very high risk, and even if the market goes back up, you have no idea of when it will do so. And yes, you can use these premium stock picking services and you can use their advice, but they're just making guesses. They don't know for certain what's going to happen in the future. And so if you sold your car and you went all in the stock market, you may have to wait a month, 2 months, 3 months, probably even a year before you start seeing any returns on that investment. So you don't want to borrow money to invest and then pay interest on that money and then be at a disadvantage because you borrowed so much money that you're struggling. You won't be able to access the money that you borrowed and invested also because if you pull that money from the investment, you would be at a loss. So this is a very common mistake that many people make where they borrow a lot of money, they take a personal loan, sometimes a very high interest loan, and then they invest the money expecting that a particular stock or the stock market in general is going to skyrocket, and it doesn't happen in the time frame that they expect it to happen in, and then they end up paying so much in interest and putting themselves at a disadvantage financially. So yes, you can use leverage, but when starting out in the stock market, don't go selling your stuff and do not take out loans to invest. Instead, save your money and invest what you can and make small contributions to your investments until you can invest more money later on. Now, another mistake that you should avoid in the stock market, especially if you're just starting out and you're a beginner, is trying to do stock picking because this can be very overwhelming when you're new to the stock market. And while you could pay for some of these premium stock picking services, it's going to cost you, and these stock picking services give you predictions, as the word suggests, because predictions are guesses. It's probably a well thought through, well analyzed guess, but it's still a guess. So this means that even the best stock picking services can be wrong at times, and even a lot of famous people in the news predict stocks or predict moves in the stock market, and at times they are wrong. They are way off on their predictions, and so no one really knows what is going to happen in the stock market. So because of this, I wouldn't recommend you guys going and trying to pick stocks and trying to figure out what stock is going to go up and what stock is going to go down, because there is no way of knowing for sure. So instead of taking that risk with the money that you have to invest, where you could possibly lose a lot of your money, I want you guys to avoid that mistake, and I want you to instead invest in ETFs which have a much lower risk to them. If you invest in an ETF with hundreds of stocks in there, even if 10 of those stocks are in the red or they're underperforming or they're in the negative, then it still probably won't affect your position because the other 90 stocks or more stocks that are in that ETF could be positive, and the positive returns will offset the losses for the stocks that are not performing very well. And that way you always make money, or at least you don't lose any money or lose a lot of your money if the stock market goes down. So if you do it this way, the chances of you losing your money are minimized a lot. So as a beginner starting out investing in the stock market, I would recommend that you get into ETFs and not do stock picking. And if you make money in the stock market and then you want to pick some stocks to see if you can make quick money in day trading, for example, then that's fine. But don't just save $1,000 or $5,000 or even your first $10,000 and make your first investment and then just go right into stock picking, because while you can make a lot of money, you can also lose a lot of your money that way. Another common stock market mistake that you should avoid is having all your eggs in one basket. So don't just start investing and just go all into Tesla and invest everything you have into Tesla, because stocks and the stock market is unpredictable. You can make some great gains, or you could lose, or you could have to hold that investment for months or even years before you got a very good return. Now, because the stock market is risky, I would recommend that you invest in not one stock, but multiple stocks, or just invest in ETFs. And guys, you can also invest in multiple ETFs and invest in bonds. Do a mixture of stocks and bonds. Now, with that said, you also want to consider the stock markets that you are invested in. So, for example, most people only invest in stocks on the New York Stock Exchange, and there are ETFs that you can invest in which will expose you to global stocks. So even if the stock market in America or the economy in America isn't doing so well, you're still invested in global companies. And that way you are minimizing your risk to losing your money, or at least missing out on making even more money. So if you do it this way, you'll always have a mixture of investments. You invest into stocks if you want passive income from dividends. Maybe also invest into ETFs for long-term growth. They have different ETFs geared towards different goals. So some are geared towards short-term earnings. Some are geared towards providing you with dividends every single month. Some ETFs are geared towards long-term growth. Some ETFs are geared towards exposing you to foreign markets and international stocks and companies. And then you have bonds, which are very safe but yield very low returns. So definitely don't put all your eggs in one basket. Don't just invest in one single thing. Do your research and invest in multiple stocks, ETFs, bonds, and markets. Now, the final stock market mistake that I don't want you guys to make is just not investing consistently and regularly. So for example, the S&P 500 that I mentioned a lot is where you can get an average of about 10% per year in returns. And if you were to start an investment account with $1,000, only $1,000, and then put $200 in that investment account per month, which is just $50 per week, which you probably spend on things you don't want or don't need right now, then at the end of 35 years, you'd have an ending balance of about $800,000. So if you start this when you're 30 years old, by the time you're 65 years old, you'd have $800,000 invested, and from that amount, over $700,000 would be from the returns of your investments. If you're younger and you start this at, let's say, 20 years or around there, and you invest $50 per week for 45 years, by the time you're 65 years old, you'd have over $2,200,000 invested, and you'd have only contributed $100,000 in those 45 years of investing, and $2.1 million from that investment portfolio at 65 would be from the returns of your investments. So this is why investing is really important. Invest so you can become very wealthy in the long term, and this is why you shouldn't make the mistake of not investing right now, even if you only have a small amount of money to invest. So invest what you can consistently, and over the decades, it will help you to build a lot of wealth. So these are all the stock market mistakes that I think you guys should avoid in 2021 and beyond. If you have any other stock market mistakes that you think are worth mentioning, then comment them down below so everyone can see them as well. As always, guys, thanks for watching. Give this video a thumbs up if you like the content. Don't forget to subscribe and hit the notification bell so you can get the updates when I post videos. And remember, I post videos here every single day. Be sure to also check all the links down below in the description, which includes links to those 2 books that I mentioned earlier on in this video about investing, and also a link to WEBULL, which is a free investment platform and an app that you can download right now on your phone. It's completely free. If you deposit $100 in your investment account, you'll get 2 free stocks that can be anything worth up to $1,600. Once again, thanks for watching. All the best with making money in the stock market, and I'll see you guys tomorrow in the next one.